Thanks, everybody, and thanks, Patrick, for having me here. A little bit of background about us and me. I've spent originally about 12 years working at Yahoo, based mainly here in Sydney. I did the Yahoo 7 joint venture, and then went to TPG Capital. We invested in companies like SurveyMonkey and Uber and Airbnb and Property Guru. And then joined Jungle Ventures about 18 months ago. We primarily invest out of two different platforms. We have a seed platform, which looks at very early stage companies in high growth global businesses like IoT, artificial intelligence, a lot of the things you heard today. And then we have a main fund, which is a Series A, B fund, and we invest between 1 and 5 million. We primarily invest across India, Southeast Asia, Australia, New Zealand. Probably a little under-indexed in Australia, two portfolio companies in the US. And we tend to, most things have a nexus back to Southeast Asia, so we're all based in Singapore. So we can add the most value to companies that are based in the region. But today I was going to talk about three things. Patrick wanted me to cover kind of a Southeast Asia market update, a few highlights around some growth categories which are interesting, and then also an update on the venture and ecosystem up north. So, I think Australia has had a long trend towards migrating to the US. There's also obviously the go global first type businesses. I think that's great for certain types of businesses, like software. You absolutely could grow global first. For other businesses, it's not hard to see why you want to go to the US. It's a huge market, a lot of opportunity, a lot of access to great talent, thought leadership. But I think as a lot of people get there, they realize it's super expensive. It's really hard to acquire talent and capital, and it's just a large market it's harder to break out of. So an alternative to going to the US straight from Australia is to think about Asia. And so ASEAN is 10 markets. When we think about Southeast Asia, I really think about kind of the 6 core markets of Southeast Asia, which are Thailand, Singapore, Indonesia, Malaysia, Vietnam, and the Philippines. And just to paint a landscape of what ASEAN looks like, it's just over 640 million people. We've got about 340 million online. And the number to really look out for, which is what came up in Jason's presentation today as well, is that over 300 million of those people are accessing it through a mobile device. If I think about 10 years ago in Asia, most people were accessing the internet, particularly in some of the emerging geographies, through internet cafes. Now, with entry smartphones being in the $35, $50 range, most people are having their first and primary experience on a mobile device. And so businesses, especially consumer businesses, but even some B2B businesses, really need to have that mobile first mindset in order to be successful. And then to break down Southeast Asia in a little bit more detail, as you think about, why should I expand my business from Australia to Southeast Asia? Singapore is quite an interesting market. The dynamics GDP per capita, for example, is very similar to the US. Nearly everyone is online. Nearly everyone has a smartphone. A lot of the same consumption dynamics, credit card penetration, logistics, delivery, things like that are very similar to the US. So it could be a good test market before you go to the US. Indonesia, largest country in the region, it already has, it's about 80% the size of the US market and already has 113 million people on smartphones, which is about half of the US market today. But they estimate it could add another 200 million over the next few years. But obviously, Southeast Asia is not one market. It's a collection of markets that are not homogeneous. So if you think about Singapore, very mature, very much like the US or Australia, contrast against Indonesia, which has internet penetration still in 37%, but the percent of people who are unbanked are 34%. In the Philippines, for example, 72% of people currently don't have a banking relationship. So that makes transactions, that makes consumption much more difficult, very much a cash-based economy. And yet, the people of Southeast Asia across all of the region tend to be very similar in what they do. It's a very young population, so if you think about Philippines, for example, nearly 70% of the population is below the age of 34. The region as a whole, 70% is below the age of 40. So most people are quite young, and they're quite socially active. So if you think about Twitter or Facebook or most social media, these are some of the largest bases for those companies globally. In mid-2016, there was a report that was done by Google and Temasek. One of the downsides of Southeast Asia, unlike Australia, the US, is there's just not a lot of data on the region. So this was a unique opportunity. It was also co-sponsored by INSEAD. And what they found was that by 2025, they thought Southeast Asia would be about a $200 billion opportunity. And that was broken down into only 3 categories in 6 countries. And they looked at first-hand e-commerce, so they didn't look at second-hand sales, so eBay or Carousel or anybody selling second-hand goods. It was only first-hand e-commerce, travel, and then media. And they also highlighted the fact that in order to grow an economy of that size, it needed to have a venture ecosystem. So there needed to be about an extra $40 to $50 billion of additional capital in order to recognize that opportunity. It's the fastest growing market in the world. Indonesia is the fastest growing nation in the world. And they're projected to add 123 million people. And the interesting stat here is that Southeast Asia, so just these 6 markets, are adding 124,000 people every day that are new to the internet. So that's 3.8 million people every month for the next 5 years are going to be new to the internet. They're going to have their first experience on a smartphone. And they haven't made their decision about what social network they want to use or what search engine they want to use or what media site they want to go to or what their travel booking engine is going to be. So these are all new consumers coming online, which is an exciting opportunity, I think, for startups. It also, as a region, has some macro tailwinds behind it. It's a young population, as I said before. The internet speeds are actually quite fast. So it's hard to compare it to NBN down here and the disadvantages that Australia has. But if you think about internet speeds, and there's a lot of free Wi-Fi. And so in Bangkok, for example, free Wi-Fi in a shopping center is going to be faster than what you can get here in North Sydney. Strong GDP growth, so as a region, it should grow at about 5%, even with some slowdown in China, still projected to grow about 5% over the next few years. Large percentage of people that are unbanked, which means there's a lot of opportunity for new payment systems, stored value. Alipay has now launched in Southeast Asia. They're coming down from China. There's a lot of opportunity to bring those unbanked people into a digital world. And then one of the categories we're going to talk about is e-commerce. And one of the unique things about Southeast Asia is that people don't have access to the brands, retail, shopping offline. And so online gives them an avenue in order to access brands and access products that they can't get locally. And most of that is going to be driven by mobile. So today, China, obviously the largest e-commerce market in the world, already passed the US. And 60% of that is getting driven on mobile consumption. Southeast Asia is going to be exactly the same way. So the one category that we're going to talk about today, I have some stats on 2 other categories, but it's really about e-commerce. And so if you think about the region, over 500 million people, GDP growing at 5%, over 100% mobile penetration. There's an emerging middle class that's forming that has a higher discretionary income. So when China really took off from an e-commerce perspective in 2007, GDP per capita crossed $3,500. And Indonesia this year last year just crossed $3,600. So you now have an emerging middle class, more consumption, more disposable income to start spending. And yet e-commerce today represents less than 1% of total retail. And over the next 10 years, from 15 to 25, offline retail is expected to double on its own. And so the Google Temasek report was projecting it would be about an $88 billion market, but recognized that could be as high as $120 billion. It's also going to be the first region in the world where the 2 major e-commerce players are going to go head to head. So today, there's not a market where Amazon currently competes with Alibaba. And Singapore in Southeast Asia is going to be the first market. So Alibaba has acquired a controlling stake in Lazada. They've also launched their financial business, Alipay, or Ant. Amazon is launching, it's expected to be about May or June, and they'll launch Amazon Prime in Southeast Asia. So first market where the two of them will compete head-to-head. I think the dynamics for e-commerce in Southeast Asia are going to change dramatically over the next 6 to 12 months. And yet, consumption from a consumer standpoint, despite the differences between the markets, despite that they're emerging markets and not necessarily growth markets, it tends to map broadly to a US baseline. So what people are buying, how they're consuming online tends to be very similar to what's happening in the US or any other mature market. So you see fashion and apparel, business services, travel, gaming, computer and electronics. Two other categories which the report highlighted, which were quite interesting, was travel. In travel in particular, it's the ride-sharing space, so the Grab Taxi or Gojek or Uber. It's expected to get up, it was about 7 million riders in 2015. That's expected to go to almost 30 million over the next few years, and it'd be a $13 billion category. And so as you look at who's raising capital in Southeast Asia, a tremendous amount of capital is going behind this transportation and ride-sharing space. On the other side, media. If you think back to Australia 10, 12 years ago, there was a massive disconnect between where consumers were spending their time and where advertising dollars were going. That's exactly the case in Southeast Asia today. So we're probably about 10 years behind where Australia was here, where you finally are seeing consumer dollars going to where consumption is happening. That evolution still needs to take place. And so if you think about a lot of the learnings that happened in the US or Australia or the UK in terms of driving that dollar spend to match consumption, that still hasn't occurred in Southeast Asia yet. So there's a lot of opportunity for technology, for learnings to accelerate that shift. And then obviously, Southeast Asia has always been a very big gaming market. Vietnam is about a $300 million gaming market unto itself. This was some research that we did internally at Jungle. We looked at the competitive intensity and the amount of capital that's going in to Southeast Asia, and we compared it to India. So if you think about the internet population, and we looked at a major metro, because most internet businesses tend to be major metro focused. So a company may say, we're in Thailand, but the reality is they're probably in Bangkok. Or if you say, we're in Indonesia, the reality is you're probably just in Jakarta, because that's the main population centers. And urbanization is really driving major metro. And so there's not that big of a difference between Southeast Asia and India on a population base, top 8 metros. But if you look at the differential in venture capital funding, there's a massive disconnect. So funding in Southeast Asia is only 30% of India, despite having about the same size. And then also the competitive intensity. There's just a lot less startups in Southeast Asia than there is in India, for example. And in a lot of the landscape mapping that we do in our firm, there's just a lot of spaces today where there is no player, where there's virtually no company operating within a known, interesting category. So still a lot of opportunity in Southeast Asia. And yet there's a lot of M&A that's happening. One of the things that's interesting about Southeast Asia is because it's such a complex market, companies that want to have a presence there, it's easier for them to go and acquire a team. So if you can acquire a team that understands the nuances and complexity of having operations in Malaysia and the Philippines and Thailand and Indonesia, that's a much more attractive team to go and acquire. And so most of the acquisitions that you've been seeing have really been regional players. There's been a number of tech IPOs. Ketcha has probably done about half of those. Most have been on the ASX. The ASX provides Southeast Asia with a lot of liquidity. I think also the self-managed super funds, a lot of people are looking for high growth businesses in large market opportunities. So Southeast Asia tends to fit that quite nicely. We've also had a complete change in the capital structure in Southeast Asia. So probably 2 or 3 years ago, there was a handful of incubators. There was 2 Series A venture capital funds. That's completely changed over the last 2 years. You now have a number of players at every stage in the funding cycle. You also, at the bottom, have a huge number of corporate VCs. So 3 years ago or 4 years ago, Southeast Asia was actually over-indexed from a corporate venture perspective. There's still a lot of active corporate VCs as they look to acquire and invest behind innovation across the region. And then from an investment perspective, the numbers look phenomenal. The reality is that about 5 companies captured about 70% of the total value here. And so there is a disproportionate amount of capital going towards a handful of companies like Grab or Lazada, Tokopedia, Gojek. So Gojek is actually, they just raised $550 million. They're also now out in the press again, expected to raise another $1 billion. So as a conclusion, from Southeast Asia's perspective, it's a huge potential opportunity, $200 billion by 2025. That's just across those 3 sectors, 6 markets. There's a lot of opportunity to translate key learnings from mature markets into emerging markets. That creates opportunities for startups. You have strong macro tailwinds, young population, early adopters, willing to transact, very social in nature. Rapidly growing middle class that's supported overall by an expanding GDP. And then you have opportunities for Aussie businesses, rather than going to the US, to expand to Singapore, to Southeast Asia, to create a stronger foothold that you can then base your US expansion off of. So a lot of times we'll meet with founders and say, if the US doesn't work, for whatever reason, you try and expand and you can't get traction and you have to retract. To retract to Australia, which is overall a much smaller market, and then continue to raise capital to build a business here, I think is a weaker proposition than retracting to Southeast Asia plus Australia. It's a much larger population. Your accessibility to capital, accessibility to follow-on capital to continue to build your business, I think it's a much more compelling story. So the conclusion is, I think it's one of the most exciting times to be building a business in Southeast Asia. Thanks very much.